Order submitted. Order filled. Stop filled. Order submitted. Order filled.
We like to imagine that if we just build enough of these and these, we can ditch fossil fuels and save the planet. Unfortunately, it's not that simple. Some things we just need good old-fashioned combustible fuel. Now, startups around the world are betting hydrogen is going to become the fuel of the 21st century.
Welcome to the world of decentralized finance.
I'm going to take over here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people,
I don't want to have sand on the outside of the sun.
the transactions,
If everything back here tells you.
and the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
As a way to remind listeners how sensitive the markets are, any commentary about trading, we did see some pressure in the yuan, we did see some pressure in the yen. That is now being reversed.
The CPI in America coming up later this week, then it's on to bank earnings on Friday with JP Morgan in focus before we get there this Monday morning. But this is what the price action looks like on the S&P 500, slightly negative on the S&P. We're down around about 0.1%. In the bond market, treasuries closed, yields higher in Germany by a couple of basis points to 221 on a 10-year. The spread between Italy and Germany this morning through 250 basis points, in and around the white of the year at 253. The Italian 10-year up by 4 basis points at 474. So the euro weaker by a third of 1%. Euro dollar Lisa 97.13.
And how much lower could it go? And you were talking just a bit ago about the euro crisis and all of the parallels that we're seeing. At what point does this become a really, really difficult moment that requires a more extreme intervention? What could that intervention be at a time when all responses are called into question in a new inflationary regime?
Whatever it takes, summer 2012, 6 handle right now. Hard to compare the two eras, the two markets, apples to apples, not quite, but it gives you an idea of where we are now versus where we were then.
And then this goes to how much can this particular debt cycle withstand a 6% rate? And I get your point that a lot of companies and a lot of nations have pushed out maturities. Is that good enough?
Resilience. Don't you see that word everywhere?
Everywhere.
In Southside research, resilience.
Resilience.
It's more resilient than it was.
Is it just delayed? Is it delayed reaction? Is it
Possibly.
resilience or delayed?
Jill Moe is going to join us now. Feels like Euro crisis all over again, except it's different. Chief economist at AXA Investment Managers. Jill, let's start there. Let's just start with the key differences between what we're facing now and what we faced back then.
Well, first of all, at the time we had massive external imbalances in the periphery. We had massive current account deficits. So you had an issue with government, but you had an issue with the way the entire economy was working in the southwest of Europe. You don't have that now. Those countries have really done a good job at reestablishing proper external position. The other big difference is that we have different instruments. The big issue we had in 2011 is that there was nothing in the arsenal that you could use to actually stop this. We didn't have the ESM, we didn't have an ECB, which after that has proved its flexibility. So there was this scramble to finding institutional solutions in just a matter of months. Now at least we know that we can rely on those emergency mechanisms if things get to the point that we need to use them. And I think the market knows it, and that explains. It's one of the reasons why we haven't seen, for instance, a lot of contagion moving away from Italy and affecting other countries in the south. We know that the instruments are there.
They came up with OMT with Draghi in the summer 2012, and the beauty of OMT is it never got activated, never had to be used.
disappear in the light forever. And he knows the power of death over our souls as sing with words are said to start a war. With the venomous kiss you gave me, I'm killing loneliness. With the warmth of your arms you saved me. Oh, I'm killing loneliness with you. Killing loneliness that turned my heart into a tomb. I'm killing loneliness. I'm killing loneliness. I'm killing loneliness. With the venomous kiss you gave me, I'm killing loneliness. With the warmth of your arms you saved me. Oh, I'm killing loneliness with you. Killing loneliness that turned my heart into a tomb. I'm killing loneliness. I'm killing loneliness with you. Killing loneliness with you. Killing loneliness with you. Killing loneliness.
Order submitted. Order filled.
When you live with moderate to severe Crohn's disease or ulcerative colitis, your day can be full of reminders of your condition. Never knowing, always wondering. You weren't made for UC or Crohn's, but gut-focused Entyvio is. Entyvio works at the site of the problem to block certain inflammation-causing cells from entering the gut. Infusion and serious allergic reactions can happen during or after treatment. Entyvio may increase risk of infection, which can be serious. Although unlikely, a risk of PML, a rare, serious, potentially fatal brain infection, cannot be ruled out. Tell your doctor if you have an infection, experience frequent infections, or have flu-like symptoms or sores. Liver problems can occur with Entyvio. In clinical
It starts with
One thing, I don't know why. It doesn't even matter how hard you try.
Just gonna stand there and watch me burn. Well, that's alright.
Do you breathe the name of your Savior in your hour of need? And taste the blame if the flavor should remind you of greed, of implication, insinuation, and ill will, till you cannot lie still. In all this turmoil before red cape and foil come closing in for a kill. Come feed the rain, 'cause I'm thirsty for your love, dancing underneath skies of lust. Yeah, feed the rain, 'cause without you, love, my life ain't nothing but this carnival of rust. It's all a game, avoiding failure when true colors will bleed. All in the name of misbehavior and the things we don't need. I lost for after, no disaster can touch us anymore. And more than ever, I hope to never fall, where enough is not the same it was before. Come feel the rain, 'cause I'm thirsty for your love, dancing underneath the skies of lust. Yeah, feel the rain, 'cause without you, love, my life ain't nothing but this carnival of rust. Yeah, feel the rain, 'cause I'm thirsty for your love, dancing underneath the skies of lust. Yeah, feel the rain, 'cause without you, love, my life ain't nothing but this carnival of rust. Don't walk away, don't walk away. Oh, when the world is burning, don't walk away, don't walk away. Oh, when the heart is yearning, don't walk away, don't walk away. Oh, when the world is burning, don't walk away, don't walk away, Lord, when the heart is
The public seems to have lost interest in waiting around for self-driving cars. Wow. And I'm still waiting to be able to buy or just fly a self-driving car on demand. Why is it taking so long?
I think with self-driving, first of all, the opportunity is so clear. So the reach is so strong. People that these things just take time. So many real scenarios. You have so many people that have been learning about driving since birth and profiling that using AI sensors and computers. It's turning out to be a lot of fun. The last bit
or a manager or leader, in every interaction, you're really finding common ground with that person, ideally creating shared goals. And this creates a really strong sense of inclusion.
I heard it said one time, I can't change hearts, but I can change laws. Well, I'd like to paraphrase that and say, I can't change what you think, but I can certainly change what you do. And as long as I change what you do, I'll end up getting the results that I want.
Improving workplace diversity and inclusion isn't just about building one set of habits or eliminating a certain behavior. And it is likely to be uncomfortable. But if the future of work can truly leverage diverse and inclusive cultures, it can have effects beyond just the company's bottom line.
I truly believe that the business workplace is the only place that some people ever come into contact with anybody who's different from them, We can spend our lives around people who are no different from us outside of work all we want. But if we go to work, and if you have an organization that decides it is committed to diversity, equity, and inclusion, and it is committed enough that it is going to have priorities, habits, and systems in place to make that grow and be what it needs to be, you have a choice. If you work in that environment, you're either going to get on with it or you're not. And so I think that if business is the one entity that could actually change this, because no place else has that reach, no place else has that context, no place else has the power, the money, and the resources to change things than the commercial world. And so if we step into this and do this work, I think it'll change society.
We work in a world of imagination. As humans, we're always projecting ourselves onto any characters that we see. We may see Lightning McQueen as a car, but we're still interpreting that as Owen Wilson, as a white male. It's always really striking to me that we can imagine talking cars, but we can't imagine female NASCAR racers. It feels like we should be able to do this.
We should be able to do this, but representation in the movie industry has been an ongoing fight. The world of animation is no different. According to a report by the USC Annenberg Inclusion Initiative, only 17% of 120 recent animated films featured female characters as the lead or co-lead, and only 39% of 100 recent animated TV series featured a largely female cast. Disney touts itself as a progressive and diverse company. Studies from their 2021 fiscal year show their ongoing stride for diversity in the workplace. But this specific problem is less about the people behind the screen and more so about the characters and speaking lines in animation.
My goal is to kind of normalize seeing diversity on screen. Being able to present that on a large scale is incredible.
This is Jessica Height, the department manager of feature films at Pixar.
Subfilled.
Before managing the art department, her work and discoveries at Pixar changed the way in which scripts were digested.
Several years ago, I started a program or a process of tracking gender across our characters and sort of trying to work with increasing screen representation and diversity on screen. I got started in theater. I worked at a theater called the Magic Theater in San Francisco. Because we were a smaller theater, we were able to be a lot more diverse in our choices. I know personally as a director, I was absolutely drawn to those stories. My transition to Pixar actually came directly from theater because Mary Coleman, who had been the associate artistic director at the Magic Theater, had transitioned over to Pixar. She would bring me in to do script coverage, which was basically reading scripts and writing analysis.
The continuous reading, writing, and analyzing surprised Jessica after she noticed one major commonality.
I first noticed that there was a discrepancy between the male and female characters when I was working on Cars 3. What I was sort of feeling was that, this feels very uneven. And so I went in and actually counted the difference. And at that point, it was 90% male and only 10% female. It was so stark. It became something that I think I was unable to step away from and say, this isn't a problem. I had gone back and tracked the data across all of our films. At that point, where we were was about 75% male for speaking characters and for the line count.
Take a look at Pixar's earlier movies and one of their most popular franchises, Toy Story. With the exception of Andy's mom, sister, and Bo Peep, virtually all of the characters and speaking lines are predominantly male.
When I finally was able to present this to the executives, I did it with a collection of charts and graphs because for me, being able to take the emotion out of what we were doing and to just be able to have them look at the numbers and it was irrefutable. I remember being absolutely terrified in that meeting of just, handing them out and wondering what people were going to say as this room of all of the top execs were in there looking at it.
Not only were the executives open to hearing about Jessica's discoveries, but they immediately put a plan in action, working together to come up with a solution.
As a studio, we have the gift, really, of working with these incredible technical minds, as well as these storytellers. And so every time you come up with an idea of here's something I would like to change, A technical wizard will come in and say, oh, I can create a tool for that to make it really easy and really scalable. I had some incredible allies, the biggest and most amazing one being Josh Miner, who is in our tools department. He was thinking about it from a technical point of view of like, is there something that we can be doing as an organization that might be able to address these problems? And it was really Josh that said, hey, we can use this tool that we already have in Pixar that we use as script supervisors to track data. Now this is something that the executives, the producers, the directors, anyone on any of the creatives on any of our movies are now expecting this information, and it becomes part of the conversation at every Brain Trust.
In 2019, Pixar created Spark Shorts, a series of short animated films designed to give women and people of color more opportunities in animation.
There was really a space where the cultural moment outside of me, outside of Pixar, really shifted. And I feel like the momentum of that was really something that helped ricochet the work that we're doing into the sort of level that we're able to do right now.
Black Lives Matter and Me Too were those cultural moments that catapulted a shift towards producing more diverse and inclusive movies. Pixar films like Coco, Soul, and Encanto show the level of success when diversity and representation are showcased. And look at the cast of Toy Story 4. Fast forward through the franchise and we see the introduction and inclusion of characters like Mrs. Potato Head, Jessie, Dolly, and characters like Bo Peep were given more meaningful roles in the main narrative.
In animation, it takes so long to make our films, so we are finally starting to see the receipts of the work that got started in 2016, in 2017, when we really, as a studio, started paying close attention. As you see the next films coming out, you're going to be seeing a lot more diversity on the screen. I also think that we're starting to see more women, more people of color, more people in the creative spaces that are creating. And I think that naturally leads to more diverse representation on screen. I know it's not always the big jumps that we want, but I feel like it's starting.
Today's global futures markets are more dynamic and compelling than ever, and now they're more accessible to you. The team at Tradeovate has built a modern futures trading platform for beginners and professionals that fits your trading style. Our cloud-based platform allows you to trade on any device, across all platforms, seamlessly, anywhere, anytime. We offer access to global markets.
Tune in to watch those who shape our world explain how the world shapes us. This is Emma Barnett Meets on Bloomberg Quick Take.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How worried should I be about inflation as a retail investor?
This is Trillions ETF MasterChef, where we interview the chefs of the finance world on their hottest investment recipes.
If you're an investor that really believes in investing for the future, that can handle or withstand some of the volatility that can come, then yeah, it could be used as a core holding.
You have athletes and you have influencers as clients. I'd assume they're into crypto. Are you getting them exposure?
We're absolutely overlaying it on the portfolio.
What's your favorite ticker?
It's the best ticker ever. It really kind of captures the themes.
What you're trying to always deliver is a very simple solution. And if you can deliver that simple solution powerfully, I think that resonates quite well in the market.
Tell us about this portfolio. Where's that spice going to come from?
We're looking for portfolios that have less risk than the market, but that perform better.
You are building a portfolio. It's much like, cooking a meal. And ETFs, I just think, make investing just so convenient and easy.
Trillions ETF MasterChef, only on Quick Take.
Coming up on Quick Take.
Sometimes waking early in the morning, I feel so afraid because
Phil.
It looks like a peaceful place, but it is the most dangerous place. Here in Kibera, we don't think about death because it always happens. It was not my plan to give birth into that community. I feel so afraid raising my child. bad things happening around. They thought that marriage was the only solution for my life after I gave birth.
All this and more on Quick.
Sometimes waking early in the morning, I feel so afraid because it looks like a peaceful place, but it is the most dangerous place. Here in Kibera, we don't think about death because it always happens. It was not my plan to give birth into that community.
Order submitted. Order filled.
I feel so afraid raising my child. Bad things happening around. They thought that marriage was the only solution for my life after I gave birth. But for me, I had my own thoughts. You know, when Gabby was 5 months,
Every Sunday, I'm going to send you my weekly option pick that I'm looking at for the week for free.
A decent mix for the Fed, but if inflation doesn't come down over the next couple of months, they're going to continue to tighten pretty aggressively, and that could definitely have pretty bad effects for 2023.
And perhaps 4.5% is as far as they'll go. Tony, that's what Charles Evans is saying right now. Back in rates around 4.5% in 23 and on hold for some time. What's the some time? How long?
Well, good morning, Jonathan. Good to be with you. And while I appreciate Charles's optimism, it may be a little bit too much of rainbows and unicorns. So I think 4.5 is a possibility. We would say 4.75 is more likely. But we do think that they're likely to hold throughout 2023. So while we think the economy is going to be in recession, we think it'll be a relatively mild recession. And we think that the Fed will actually pivot to rate cuts sometime in early 2024.
2023 up to 475 and hold through much of next year. Esty, plug that into what this would mean for the equity market. If we went to 475 through much of next year, how much pain would we see?
Well, the futures market is already pricing somewhere between 4.5 and 4.6. So 4.75 is a bit above where we are. I think as long as we don't hit that 5% mark or more, the market is pretty much pricing most of it in and should be able to withstand it. We've seen earnings expectations come down, not just for this earnings season, but also for 2023. Right now, we still have those rate cuts priced in for the end of 2023, but it's still a little early to say that the Fed would not look through that. That's, over 12 months to get inflation back to 2% and then potentially see what the growth impact is and if the economy needs some help to come out either of a shallow recession or of a very sharp slowdown. In any case, that's what they're going to engineer. So right now, the market's probably pricing in something close to that. Anything much more hawkish for longer, I think, would be quite painful.
Esty, last time we spoke, you thought the June lows would hold. They didn't. What went wrong, do you think?
Well, I think a couple of hot inflation prints really was the worst of it. And the market, I guess, was expecting a pivot. I don't know who thought we would pivot to dovish. I mean, pivoting to a pause or to see what the rate hikes are doing. Let's keep in mind, this is the fastest pace of rate hikes the Fed has ever done. At some point, they need to see what the impact is. You don't see that after 1 month. So we're going to have, 4% of hikes within 6 to 9 months, and the Fed is going to have a look at that too.
Futures up 1/3% on the S&P, and the Nasdaq up 0.2%. CPI is just going to hijack the conversation later this week with regards to the Federal Reserve. Then it's on to corporate America, JP Morgan on Friday morning. These corporations, corporate America right now, has to face a growing list of headwinds. Relentless monetary tightening, a surging dollar, and an incoming read on inflation, all weighing on sentiment. Kelly Lyons has more. Hey, Kaylee.
Hey, John. Yeah, it's not a great cocktail for corporate profitability, and we're going to get our first reads on that really coming this week. Along with JP Morgan, you have 14 other S&P companies reporting this week. The bulk of them, though, will come in the weeks to follow. Between the week of October 24th and October 31st, you have about 2/3 of the market cap and members of the S&P 500 reporting. So buckle up. It's going to be a bit of a long ride. But to your point, John, given all of the headwinds that these companies are facing, we have seen a deterioration in expectations for this earnings season the closer we get to it. Back in mid-August, about 2 months ago, analysts expected EPS growth of about 4.3% for the S&P. That number is down now to 2.6%. So definitely a slowdown compared to what we saw in the first and second quarters. But analysts are still betting that these third quarter results will represent the trough, with a rebound starting in the fourth quarter. We'll see how long, though, that optimism can hold up, considering we have seen things start to deteriorate in sell-side expectations. Analyst earning downgrades outpacing upgrades for 17 weeks in a row through the data we have at the end of September. And we've heard from a number of strategists consistently on the street who are warning we have not seen the worst of the downgrades yet, that more are on their way. And I would just point out in our latest MLive survey released this morning, that poll survey showed more than 60% of more than 700 respondents say this earnings season will push the S&P lower, John.
Kelly Lyons, thank you. Tons of warnings this morning, including another one from Morgan Stanley's Mike Wilson, who said the following: last week packed in a year's worth of volatility, both up and down, as the market battle between deteriorating fundamentals and supportive technicals continues. Ultimately, fundamentals prevail in our view, but it could take longer than we would like. Esty, I'd love your view on the earnings season going into the big banks this Friday.
Well, everyone is expecting it to be poor. Earnings expectations have come down. Everyone thinks this Q3 is going to be the opportunity for guidance to be poor, for 2023 expectations to be brought down. The question really is how much is already priced in at this point of this bad news that pretty much everyone knows is coming. So I think we're going to get, of course, some pretty bad surprises. Let's say something, around what the FedEx said, although it's difficult to imagine much worse than the guidance that they gave. But I think we're also going to have a couple of beats, as we usually have. Tech should hold up better.
Order
and then
submitted.
the banks,
Order
so far we've
filled.
seen that consumers are holding up. There's a little bit more of an impact at the lowest wage earners because of inflation. But beyond that, we're still seeing some solidity in the underlying consumption trend.
Tony, it's not a secret, is it? Things are bad. That's what Esty's getting at here. If the World Bank president and the IMF managing director are saying it, we're already there, and we were there a long time ago. The IMF managing director earlier this morning, Kristalina Georgieva, saying the risk of recession has gone up. Mr. Malpass, President Malpass at the World Bank, saying a real danger of a global recession. I think at this point, Tony, this is all well understood. How well priced is it?
Well, John, you bring up a good point. From our perspective, what's interesting is that we do think that the rates markets have priced in the vast majority of the move. So when we look at the 10-year, the 2-year, where Fed funds futures are priced, we think that we've really captured the majority of the move and are much more comfortable now from a standpoint of duration risk. Where we still see some more downside and don't think that the markets have fully priced in that downside, as we look at risk markets, we think that while earnings projections, as Kaylee pointed out, have come down, we do think they still have further to go. We still think it's a little bit too optimistic when you look at Q4 and when you look at the first half of 2023 from an earnings perspective. So we think risk premiums need to price in some more downside risk. So that is probably lower equities. It's also wider spreads when we look at high yield, emerging markets, investment grade fixed income. As we move through the balance of this year and the first quarter of 2023, we think you'll have some better entry points. We don't think they're going to be a repeat of the global financial crisis type of downside levels, but we do think you have a little bit more downside still ahead of us.
Tony, I think a lot of people would take some comfort, just a little bit of comfort, if the positive correlation between equities and bonds actually broke down. When can I start looking at a long bond that starts to behave like a long bond in a recession?
We think that as you turn the calendar,
submitted.
that you really will be back to that more maybe traditional,
Order
typical
filled.
bond market response and offset to your equity portfolio. We certainly think over the balance of this year, whether it's a strong CPI print possibly or some employment data that's maybe stronger, there's still a potential for a little bit of an increase further from here in rates, but we don't see the 10-year much above 4% at all. We think that we'll end closer to 3.5%. And more importantly, we think that as that economic weakness in 23 becomes very apparent to investors, we're looking at a year-end 23 10-year that will be down much closer to 3% than it is even to 3.5 or 4. So that's when duration risk and the bond market will begin to play the ballast role in your portfolio.
Tony, are you starting to lean into a little bit of duration, or is it too early?
Well, Jonathan, as you know, we've been pretty short from a duration perspective for the entire year. We're now pretty close to neutral. So we're not ready yet to say, hey, we've seen the peak in yields and we want to get long here, but we certainly leaned into it enough to cover our shorts and get pretty close to neutral because, as I said, we think that 90+% of the rate move is priced in.
Tony Rodriguez sticking with us alongside SD Dweck. BofA just published moments ago, Bank of America on their equity strategy team saying the following: consensus feedback from clients, third quarter might hold up, but who cares? Guidance is going to be absolutely terrible. They go on to say, we expect a slight 1% miss in 3Q, but big downside risk starting in 4Q. We forecast $200 in 23 EPS versus the street at $240. We'll build on that in just a moment. Coming up, the BOE launching new safety net measures to calm the bond market.
The Bank of England is in a very tight spot. Eventually, it's going to have to stop buying those bonds and start going for QT.
And you'll get a fiscal announcement at the end of this month, a few days before the Bank of England.
At Simply Safe, your safety is the only thing that matters. Every 15 seconds, our professional monitoring agents receive a call for help.
Police are on their way.
They use Fast Protect technology.
Meets that conversation. Up next.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun.
We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
Welcome to Bloomberg, the lineup.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
The Bank of England is in a very tight spot.
We have no direction yet
on the future course of UK fiscal policy.
It's almost a kind of they'll do whatever it takes period of time.
It did the right thing, we think, by protecting the pension funds at very short notice. Eventually, it's going to have to stop buying those bonds and start going for QT. There is value in the UK market. It's just a question of if that value will be destroyed by political risk.
The UK ramping up efforts to ease market turmoil. The Bank of England expanding its emergency support for the bond market just as the government announces plans to deliver its fiscal strategy almost a month ahead of schedule. Team coverage starts right now with Danny Berger out of London and Kelly Lyons here in New York. Danny, run us through the latest.
Well, so we had the BOE essentially expanding these operations. So they're going to double the amount of daily auction that they can buy. It was £5 billion. It's now going to be up to £10 billion. Of course, only $5 billion of the $40 billion on offer so far has been used. So not a lot of usage, and that will still end on Friday. But it's not going to stop there. They are launching this temporary repo facility. The idea here being that those who need liquidity, especially those pensions under pressure, can tap this. They can also use collateral that goes beyond bonds. For example, they can put up corporate debt as well. Now, it's a 1-2 punch of the BOE and the UK Treasury trying to get ahead to calm markets. We also learned today that Kwasi Kwarteng is going to be publishing that fiscal agenda on the 31st of October. That's moving it up from November 27th. So now it's going to be ahead of the BOE decision. But still, John, it's going to come the same day that QT is set to start.
The gilt market's still all over the place. Kelly Lyons, your 10-year at 14 basis points.
Yeah, the reaction to the news of the BOE expanding this program is just yields higher. Granted, we are off of session highs. At one point, the 30-year gilt yield was up 22 basis points on the day. We're now up just about 15 basis points, but still at 453. We remain around the highest level we have seen going all the way back to 2011. One strategist over at TD telling Bloomberg that essentially the market is doubting if the BOE is going to fill the maximum number of orders. And also the fact that they're announcing these new measures today kind of signals that they aren't going to have any kind of extension on this emergency temporary bond buying program. Now, of course, over the last month, the moves have been even more dramatic. We're up 106 basis points on the 30-year on the month, up 146 on the 2-year at the same time that we've seen more weakness in the British pound off of its weakest levels from a few weeks ago, but still around 110. And as Danny alluded to, it's not just about October 31st. It's about what happens just a few days later on November 3rd when we get the rate decision from the BOE. And the market is expecting it to be less aggressive than thought just a few weeks ago. Right now, Andrew Bailey and co. are sitting at 225. They are now expected to hike to around the 338 levels. So essentially, the market is pricing in a 68% probability of a 125 basis point hike. Massive move, no doubt about it. But that is still less severe than markets thought a few weeks ago when we were discussing the likelihood potentially of an inter-meeting hike, John.
Danny, let's talk about the calendar now as it stands. So Kelly just went through fiscal announcement end of the month, November 3rd, the Bank of England. You said it. QT, the end of the month, on the same day that they deliver that budget. Danny, is that actually going to happen? Does anyone you speak to believe it will?
No, to put it simply, John. We were just playing sound there from Altaf Kazama of State Street, who I spoke to earlier, and said, no, there's no way the BOE is going to be able to go ahead with QT. If they are now being pushed around by the bond vigilantes, we're already seeing it today. Kaylee pointed it out. This is a market that is testing the BOE. What will that test look like if they're going to have QT and a budget announced on the 31st? Look, it could happen that the budget comes out. It's clear that the deficit will come down. But considering the volatility as of late, this is a very fragile market. So you have the bond buying ending on Friday. You have QT and the new budget on the 31st, a rate decision then on November 3rd, followed shortly by other central bank decisions. And then this repo, that will stop, at least for the time being, on November 10th. John, a lot of potential risk events.
Danny, thank you. Looking forward to your coverage through the week as well. To Kelly Lyons, thank you very much as well. Jefferies had this to say. Long end gilts are coming dangerously close to levels where we could again see margin calls. They went on to say, and forced selling from liability-driven investment accounts. The BOE will need to step up the purchases this week to prevent further margin calls. Tony, are you interested in the gilt market just yet, or is this one still too volatile to touch?
You know, Jonathan, our head is spinning given the number of policy U-turns that you're seeing in the UK, both in fiscal and monetary policy. So we think that clearly it is too difficult right now. The volatility is too high to take any kind of really definitive position in that market. You mentioned a year's worth of volatility in 1 week in the equity market. In the UK, they've had a generation worth of volatility in the rates market in the last couple of weeks. So we think all this does is delay the BOE's need to address incredibly high inflation. So the problems in the UK are not being resolved by any of these policies, obviously. And the BOE's main problem is just becoming more and more difficult as we move through the year, given that they can't address it directly because of the volatility they're seeing in the rates markets.
It's taken some attention away from what's been happening elsewhere. I think we've all been looking at spreads in Italy over Germany through this morning, through the wides of the year a little bit earlier this morning, back to about 251 basis points, call it 252. Esty, right now the Italian 10-year just through 470. Is that becoming a bigger and bigger problem that the ECB might have to address and soon?
Well, I think that's what the bond market would like, right? Since they announced their new tool, everyone's been wondering how and if Italy would become eligible. Let's not forget that financial stability is an outright objective and part of the ECB's mandate. So if it becomes too unruly, if it becomes too problematic for Italy or for the rest of the European Union as a whole, you'd have to imagine they're going to act. As long as it remains orderly for now, they might allow it for some time, but the ECB is certainly going to have to give a lot more details on all these different policy tools and how they're going to address the spread widening to maintain this financial stability. In addition, because they're going to have to keep tightening to bring that inflation level down.
Tony, we've spent a long time now talking about policy and conflict between monetary policy authorities and what's happening on the inflation side and what's happening on the financial stability side. Can they achieve financial stability and get inflation down at the same time? Because at the moment, everything's very, very confusing, Tony. Rates up, maintaining some form of bond buying simultaneously. With that in mind, Tony, when does the Italian 10-year become a buy?
You know, Jonathan, our view has been that at this 250 level, it really begins to get the attention of the ECB. As we get closer to 300, we think the jawboning will begin in earnest. Once you get above 300 and that 3 to 350, that's when they're going to need to start actually talking about specific plans, potentially to address that. If we get over 350, then we actually think they will begin to inject themselves in the market. So it's too early right now, we think, given all of the volatility and uncertainty, to make a stand on that Italian-German spread. But we think once you get to 300, that 300 area, it becomes a lot more interesting and needs to be evaluated carefully.
Well, let's set the scene for the end of this month. October 27th, Esty, is when the ECB next meets. Can they go 75 basis points month end?
You know, they can. They have inflation close to 10%. We'll see what the German number comes out as relatively, I think, in the next couple of days. Let's not forget that part of the mess in the bond market, including what's happening in Italy, is also kind of contagion from the UK. So we are not seeing a lot of stability, but this is not all about Italy. We haven't seen that many headlines since Mrs. Meloni became prime minister. So the ECB certainly needs to act to contain inflation. They know that the growth prospects are poor. Obviously, the escalation in the war in the Ukraine isn't helpful for inflation or for growth, but they could go 75 because they definitely need to address it.
Esty Dweck, Tony Rodriguez, to the two of you, thank you. Some big central bank decisions coming up in the next 30 days or so, the next 4 weeks. The Bank of England being one, the ECB another, the Federal Reserve. Make it 3. Right now, the spread of Italy over Germany, 252 or 253 basis points or so. The yield on the Italian 10-year, 473, up a couple of basis points on a session. Coming up, the morning calls, and later, PIMCO's Andrew Bulls seeing a more compelling case for bonds. We'll get his view on just that in just a moment around the opening bow. Going into the opening bow, 6 or 7 minutes away. Futures are positive, about 0.25% on the S&P.
When I have a chance to win a golf tournament, it seems like the world slows down. You perceive things in ultra HD.
500, we're up by around about 9 points. Live from New York, this is Bloomberg.
we were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest in the industry were doing.
5 minutes away from the opening. Dow futures just about positive on the S&P, up around about 0.25% on a 3-day losing streak coming into Monday. On the S&P 500 on Friday, biggest one-day move lower on the S&P going back to the middle of September. The same day we got last month's CPI report. Last month's CPI report, the next one coming up a little bit later this week. Looking at the bond market, remember the Treasury market closed today for Columbus Day, so you look to Europe where yields are just shifting a little bit higher, and that spread between Italy and Germany gets a little bit wider through much of this morning. That level in and around 250. That's the price action. Here's some morning calls. First up, UBS downgrading Ford to sell, $10 price target, seeing little upside amid weakening profit margins and more macro headwinds. That stock is negative by more than 6% in the pre-market. Morgan Stanley cutting its price targets on Meta and Alphabet, citing low visibility for the digital advertising market. That stock on Alphabet is basically unchanged. And finally, Guggenheim upgrading Merck to buy, highlighting positive results from the drug maker's clinical trials. That stock is up by a little more than 2%. Coming up, stocks attempting to snap a 3-day losing streak on the S&P 500. We'll catch up with PIMCO's Andrew Balls, expecting further downside to equities as the bond market starts looking a little bit more compelling. We'll get PIMCO's cyclical outlook next. From New York City this morning, good morning to you all, with futures on the S&P 500 shaping up as follows, advancing around about 1/3%. Your cash open just around the corner.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
the difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great. Great questions. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
23 seconds away from the opening bell this morning. Good morning to you. 3-day losing streak coming into Monday on the S&P 500. Looking to snap that with futures positive about 0.25%. Call it a third of 1% higher on the S&P. On the Nasdaq 100, up by almost 0.1%. As your opening bell, switch on the board and get to the bond market. Take a look at not treasuries, take a look at bunds. Treasuries closed today, back open tomorrow, of course. In the bond market, just like treasuries, yields have been climbing on a 10-year maturity for 10 consecutive weeks. Right now, 220 on a German 10-year. In the FX market, with the spread between Italy and Germany that little bit wider and going through the wides of the year earlier this morning, euro-dollar breaking down by 0.4%. Earlier on, 96 handle on euro-dollar. Right now, just about holding on to 97. In the crude market, monster rally through last week. WTI coming back down by 0.2%, $92 and around about 50 cents. Let's get you some movers. Let's do that with Abby. Morning, Abby.
Hey, John. Well, let's start out with some movers to the downside going in the opposite direction of this possible update, the first update in 4. And of course, Ford is plunging this a downgrade over at UBS to sell and weak profit margins, also along with a tough macro background. Rivian also down sharply, down about 5.4%. They've recalled 13,000 vehicles to check a minor structural flaw. This just after they sorted out some of their production issues. And then Wynn Resorts down 3.2%. There was a weak holiday spending during China's Golden Week. So they are taking in their sales estimates. Those aren't the only movers, though, that are dropping this morning and this year related to China.
Target
of course,
filled.
the U.S. Commerce Department is rolling out sweeping new limits on tech sales to China. This, of course, could cause long-term ripples. Now, chips, as you know, John, are already in a world of hurt. The overall index down about 40% on the year. Big companies pre-announcing AMD last week down more than 10% on the day. NVIDIA over the summer. These new restrictions will not help. These tensions could really build. And on the day, we're not seeing the kind of declines that we've seen more recently, those double-digit declines. But nonetheless, AMD down about 1%, On Semiconductor down, NXP Semiconductors, both of those Apple suppliers, and then Applied Materials down 2.2%. That, of course, is a semi-cap equipment company, a leading tell on chips overall. And many saying that the chips, as you know, John, are the new transports, the tell on the economy.
We'll pick up on that story again in about 10 minutes' time. We'll get the DC angle to all of that too with Anne-Marie Hordern down in Washington. Abby, thank you. About 2 minutes into this, we're up higher by a third of 1% on the S&P. Energy names had a monster run through last week. We're just about positive on this morning. We're up by a tenth of 1% or 0.2 on the session. The big banks kicking off earnings season this week. JP Morgan, Wells Fargo, Citi, Morgan Stanley, all reporting results ahead of the opening bell on Friday. That means one busy Shanali Basak. Hey, Shanali.
John, we have the moment of truth for these big banks as we see just how much money they've made in currency, fixed income, and rates markets. JP Morgan is expected still to bring in more money than a year ago at the trading business, helped by fixed income, but less money than a quarter ago. That is more than $4 billion expected in that fixed income unit. I want to also take a look at lending here because JP Morgan will really start off this conversation about bellwethers. So look at that rise in rates you're seeing, that 10-year Treasury yield, but then look at that decline you're seeing at the valuation of the S&P 500 Banks Index. That is because people don't like that inverted yield curve. They're really worried about credit quality moving forward. And about $1.2 billion worth of provisions for loan losses right now are expected for JP Morgan to report this quarter. We'll want to get Jamie Dimon's forecast forecast again on that economic hurricane up front. Look at those earnings estimates there, just falling. Interestingly here, you have Morgan Stanley expected to fall 26%. They are reporting Friday. They are the richest of the big five banks, trading at 1.4 times the price to book, a little more than that. Goldman Sachs has been fluctuating all year, just under book value. So the question is, are these priced to perfection when you're seeing the ones that are already trading on the lower side, or is there more to come? Remember, Morgan Stanley serves wealthier clients in its wealth management unit. Does that see pressure as times get harder ahead? And then, of course, there's your favorite story on Wall Street. Do they take more markdowns when it comes to those leveraged loan portfolios, given they have been so heavily exposed to some of the biggest deals on Wall Street?
Twitter, the elephant in the room there.
Exactly.
Sonali, thank you. Looking forward to your coverage. Their own research departments forecasting some gloom. Morgan Stanley, Goldman Sachs, both publishing new research highlighting headwinds stemming from slowing demand, soaring costs and a strengthening US dollar. Kelly Lyons has more. Hey, Kaylee.
Hey, yeah, John, both of these guys have sounded this warning before, and they're doing so once again as we get closer to this earnings season. I want to start with what David Kostin over at Goldman